Welcome to Breaking News to Trading Moves. We are looking at a headline that just hit the wires, and it's the kind of story that immediately resets the board for an entire sector. We're talking about Medtech, we're talking about hospital procurement, and specifically, the report that Danaher is nearing an acquisition of Masimo.
It's a major headline. The valuation being thrown around is right in that $10 billion neighborhood.
$10 billion. I mean, that's not small change.
Yeah.
And the timing seems pretty aggressive. Reports are saying an announcement could drop as soon as Tuesday.
Yeah, so this is a very live situation.
It is. But before we get into the tickers, and we've got a lot of them to cover, winners and some surprising losers, let's just set the stage. The companies. Danaher, they're the buyer here, the giant.
They are. Danaher is one of those companies that is, well, it's essentially a machine designed to acquire other companies. They operate heavily in life sciences diagnostics.
And they're known for being incredibly disciplined, right?
Extremely. They don't just buy for growth. They buy for efficiency, for cash flow.
Okay, and then you've got the target, Masimo. Now, if you've ever been in a hospital, you know Masimo, even if you don't recognize the name.
They make that little clip.
That's the one. They put it on your
It's
finger.
a pulse oximeter.
Exactly. Measures your oxygen saturation. And it sounds simple, almost like a commodity, but Masimo's version is really the gold standard. It works when you're moving or if you have low blood flow.
Right.
But here's the question. Why does a giant like Danaher want a company that, makes finger clips? Is this really worth $10 billion?
It is. If you understand how money is made in hospitals, I mean, this isn't just about selling a plastic clip. It's the whole razor and blades model.
Oh, yeah.
You sell the monitor once, but then the hospital buys those disposable sensors forever. It's recurring revenue. But the real driver here, I think, is strategic consolidation. It's all about the power of the bundle.
The bundle. So this is like the Microsoft Office strategy, you mean? You don't buy Word and Excel separately?
Exactly. Think about a hospital administrator or a CFO. They are dealing with dozens, maybe hundreds of different vendors. It's a nightmare.
I can imagine.
So if Danaher walks in and says, look, we can sell you your diagnostics, your lab tools, and now your patient monitoring systems, all on one contract, that is incredibly attractive.
It simplifies the paperwork.
It simplifies everything, and it gives Danaher pricing power. They can say, we'll give you a discount on the lab equipment, but you have to use our pulse oximeters.
It locks the hospital into their ecosystem.
It creates a moat.
Yeah, that makes a lot of sense. Okay, so it's a consolidation play. Let's get into the trading implications then, because that's why we're here. Let's break this down into winners and losers. We'll start with the green arrow side of the ledger.
The most obvious winner, I'd say, is the acquirer, Danaher. The ticker is DHR.
Okay, but usually when a company spends $10 billion, their stock takes a hit. Investors worry they overpaid. Is that what we're seeing here?
Not necessarily. With DHR, investors tend to trust the management team. They see this as Danaher securing a stronger foothold in that hospital channel.
I see.
By acquiring Masimo, they aren't just getting revenue. They're getting sticky revenue. They're getting those service contracts, those consumables we just talked about.
Which makes cash flow more predictable.
Exactly, which the street loves.
And then, obviously, you have the target, Masimo, ticker MASI.
Yeah, this is pretty straightforward arbitrage. If the deal is real, Danaher has to pay a premium to get Masimo shareholders to agree. So if you're holding MASI, you're probably looking at an immediate jump in the stock price to match that offer.
Okay, so those are the people directly at the signing table. But what I always find compelling about these stories is how they pull other stocks along for the ride. These sympathy moves. Who's getting a sympathy card today?
I think the biggest beneficiary in the sympathy column is probably GE Healthcare, ticker GEHC.
Now, GE Healthcare does patient monitoring too. They're a rival. So why does this help them?
It's the neighbor selling their house effect. If your neighbor sells their house for a record price, suddenly your house is worth more on paper.
Ah, okay.
Masimo getting a $10 billion valuation tells the market that these patient monitoring assets are premium property.
So it re-rates the entire sector.
Precisely. Investors look at GEHC and say, wait a minute, if Masimo is trading at this multiple, GE Healthcare looks cheap by comparison. So you see money flow into GEHC just to catch up.
It raises the tide for all the boats in that specific harbor. Okay, let's zoom out a bit. Danaher is a bellwether for the whole life sciences tools industry. Does this deal signal anything for the other big tool makers?
It absolutely does. It signals that the M&A winter might be thawing out. For the last year or so, big deals have been pretty scarce.
Right. with interest rates and all the uncertainty.
Exactly. So Danaher stepping out with a $10 billion check, that changes the psychology.
It sort of flips the switch to risk on.
It does. It tells investors that boards of directors are confident enough to spend money again. So then you start looking at the other big players in that tools complex. Thermo Fisher Scientific, ticker TMO.
Okay.
Agilent Technologies, that's ticker A. And Waters, ticker WAT.
These are the other heavy hitters.
They are. And the logic is, if Danaher is buying, well, maybe Thermo needs to buy something to keep pace. Or maybe the smaller companies and their sites just got more expensive. It just creates a buzz of activity.
I see.
Investors start pricing in more of these bolt-on deals where the giants buy smaller firms to plug gaps. It just validates the entire sector.
So if you're holding TMO or A, you're happy to see Danaher making moves because it wakes up the whole space.
Exactly right.
There is one more group of winners we have to mention. They don't make sensors, they don't treat patients, but they always seem to win when money moves around.
The facilitators.
The investment
Banks.
The bankers. If there's a $10 billion deal, there are fees to be paid. Who's likely getting a call here?
In large cap healthcare, you have the usual suspects. Goldman Sachs, ticker GS, JP Morgan Chase, JPM, and Morgan Stanley MS.
And this is purely a volume game for them, you think?
Well, it's about pipeline confidence. When a deal this size leaks, it signals to every other CEO that the window is open. If you were thinking about selling your company or buying a competitor,
Now looks like a good time.
now looks like a good time. That builds the advisory pipeline for banks like Goldman and Morgan Stanley. Healthcare M&A is a huge revenue driver for them, so this is a very bullish signal for their fee pools.
Okay, so the bankers are happy, Danaher's happy, Masimo shareholders are thrilled. But trading is a zero-sum game in many ways. If Danaher gets stronger, someone else is probably getting squeezed. Let's talk about the losers.
This brings us right back to that bundling concept. If Danaher and Masimo join forces, they become this massive gravity well in the hospital. And that's bad news for anyone trying to compete against them as a standalone company.
So who are the direct competitors that should be maybe sweating a little right now?
You're looking at companies like Medtronic, ticker MDT, Baxter International, ticker BAX, and ICU Medical, ICUI.
Let's take Medtronic, for example.
Yeah,
They're a massive company. Why does this hurt them?
it hurts their leverage. Imagine Medtronic walks into a hospital to sell their own monitoring equipment. They put a price on the table. But then Danaher walks in and says, well, we can beat that price, and by the way, we'll also bundle in your diagnostics and lab consumables for the next 5 years.
And Medtronic can't match that kind of breadth.
They can't. So they either lose the contract or they have to cut their prices drastically to stay in the game. It creates pricing pressure. It lowers their win rates.
It effectively commoditizes the standalone players.
That is the risk. The hospital administrator, they prefer the simplicity of the bundle. If you're ICU Medical and you only do a few things, you risk getting pushed off the vendor list entirely just because you're an inconvenience to manage.
That is brutal. It really shows how a top-level strategy filters right down to the sales rep on the ground. Okay, I want to pivot to a different kind of risk. We talked about Masimo being famous for the pulse oximeter, but they're also famous for being in a massive legal brawl with one of the biggest companies on the planet.
The IP headline risk. This is a fascinating angle. Masimo has been in a long patent dispute with Apple
Right.
regarding the blood oxygen sensor in the Apple Watch.
This was big news. There was a point where Apple actually had to pause sales of the watch because of it.
Correct. Masimo won a jury award. They proved that their intellectual property is ironclad. So now, fast forward to this acquisition. If Danaher buys Masimo, that IP portfolio doesn't just vanish.
No, it gets a new owner.
And that owner has very, very deep pockets.
So if you're Apple, ticker AAPL,
Yeah.
are you worried?
You are definitely paying attention. Danaher is a serious operator. They aren't going to just let that value slide. This deal validates that the technology, the actual sensor tech, is worth billions.
It puts a spotlight on it.
It does. It highlights the fact that measuring blood oxygen is not easy and the patents are real.
And does this extend beyond just Apple?
I think it extends to anyone making consumer wearables with health sensors. Look at Alphabet, ticker GOOGL. They own Fitbit. They have the Pixel Watch.
Right.
If Danaher decides to, let's say, weaponize Masimo's patent portfolio to protect their investment, the risk of litigation goes up for everyone in that space.
It's one thing to fight a standalone company like Masimo. It's a whole other thing to fight a conglomerate like Danaher.
Exactly. It raises the royalty risk. Maybe Apple or Google has to start paying a licensing fee to keep using these sensors. That eats into margins. Even if there are no new lawsuits tomorrow, the threat level just went up.
So the tech giants are on the watch list for this trade.
Definitely.
Okay, there's one last category of losers I want to break down, and it's a little more technical. It's about valuation risk. We said that GE Healthcare got a boost, right? A sympathy lift.
Yeah.
But you're saying some companies might actually get hit with a valuation penalty.
Yeah. Yes. This is what we call multiple compression.
Walk us through that.
Okay, so you have these med tech companies that trade at very high valuations. Investors pay a lot for their stock because they expect easy, consistent growth. Companies like ResMed, ticker RMD,
Right.
or Boston Scientific, BSX.
These are the high flyers of the sector?
They are. They're priced for perfection. But if this Danaher Masimo deal signals that the hospital environment is getting tougher, that bundling is winning, that pricing pressure is on the rise, then that easy growth narrative gets a puncture.
So investors start to question if those future earnings are as safe as they once thought.
Exactly. They might say, I'm not willing to pay 30 times earnings for ResMed anymore if the market is turning into a price war. So the stock price can drop, not because the company missed a number today, but because the market is repricing the risk of tomorrow.
That is a crucial distinction. The company didn't change, but the neighborhood got more dangerous, so the property values drop.
That's the perfect analogy. It just resets the reference point for what a premium medtech stock is actually worth.
So to recap the board here, we've got Danaher, DHR, making a power move to own the hospital bundle. Masimo, MASI, is cashing in on their tech.
Correct.
We have GE Healthcare, GEHC, riding the coattails of that valuation, and the whole tool sector, Thermo, Agilent, Waters, waking up to a potential M&A spree.
And of course, the bankers at Goldman and JP Morgan lining up for fees.
Right. But on the downside, the competitors are facing a real squeeze. Medtronic, Baxter, ICU Medical, they have to figure out how to compete with a giant. The tech players like Apple and Google are looking at a stronger legal adversary on the patent front. And the high valuation names like ResMed and Boston Scientific might see their multiples compress a bit as the market adjusts.
It covers the whole spectrum, from the trading desk to the patent office to the hospital procurement department.
It really does.
Yeah.
And I think that's the key takeaway. A headline like, Company A buys Company B, sounds so simple. But the mechanics behind it, the bundling, the IP transfers, the sector rotation, that is where the real trading moves happen.
Absolutely. It is never just about the two names in the headline.
Before we close out, I want to leave you with a final thought to chew on. We spent a lot of time talking about the power of the bundle.
Yeah.
How Danaher can sort of force its way into contracts.
Yeah.
If this becomes the norm, if every hospital just wants to sign one contract with one giant vendor, what happens to the next Masimo?
That is the big question, isn't it?
Yeah.
If you're a startup with one brilliant device, can you even get in the door anymore? Or is your only exit strategy to just get bought by a Danaher?
It feels like we might be moving toward a world where you either get acquired or you get blocked out. It changes the whole incentive structure for innovation in medicine.
It certainly does. The era of the single product champion, it might be ending.
Something to keep in mind as you watch these tickers move this week. That is it for this episode of Breaking News to Trading Moves. Please note that this is not financial advice or buy or sell recommendations. This is purely the opinion of the author. Thanks for listening, and we'll catch you on the next one.